Brad Williams, Frugal Finance Bonds. I'm going to talk about the different types of bonds. This information provided by FINRA, a great resource. Bonds are issued by many different entities, from the U.S. government, cities, and corporations to international bodies. Some bonds, such as mortgage-backed securities, can be issued by financial institutions. Thousands of bonds are issued each year, and even though bonds may share the same issuer, it's a pretty good bet that each bond is unique. Most bonds are fixed income securities, meaning they provide fixed interest payments until the bond matures and the bond's principal is returned to the investor. FINRA provides comprehensive real-time access to fixed income security and trade information for many types of bonds listed below. Data is compiled from multiple sources and collected through TRACE, Trade Reporting and Compliance Engine, the facility for mandatory reporting of over-the-counter transactions in eligible fixed income securities. Here are some of the most common types of bonds. Corporate bonds. Companies issue corporate bonds to raise money for capital expenditures, operations, and acquisitions. Corporates are issued by all types of businesses and are segmented into major industry groups. When you buy a corporate bond, you receive the equivalent of an IOU from the issuer. While you don't receive an ownership right in the company, you're more likely than common stockholders to receive some of your investment back if the company declares bankruptcy. You have a wide range of choices when it comes to corporate bonds, their structures, coupons, maturity, credit quality, and more. Most corporate bonds are issued with maturities ranging from 1 to 30 years and trade in the over-the-counter market. Corporate bonds can fall under a number of classifications, including secured corporates, unsecured corporates, guaranteed and insured bonds, and convertibles. A bond's classification depends on its relationship to a corporation's capital structure. Agency securities. Agency securities are bonds issued by U.S. federal government agencies other than the U.S. Treasury, or by U.S. government-sponsored enterprises, GSEs. Most agencies pay a semi-annual fixed coupon and are sold in a variety of increments, generally requiring a minimum initial investment of $10,000. With the exception of bonds issued by Ginnie Mae, agency securities are not fully guaranteed by the U.S. government. The issuing agency will affect the strength of any guaranteed provided on the agency bond. Evaluating an agency's credit rating before you invest should be a standard procedure. Many credit rating agencies make this information available on their websites. Municipal bonds or muni bonds are issued by states, cities, counties, towns, villages, interstate authorities, intrastate authorities, and U.S. territories, possessions, and commonwealths to support their obligations in those of their agencies. They are generally backed by taxes or revenues received by the issuer. No two municipal bonds are created equal, which can make the muni bond illiquid. The Municipal Securities Rulemaking Board has educational information on muni bond investing, and its EMA website has tools and data and disclosure documents to help compare and evaluate municipal securities. Asset-backed securities. Asset-backed securities offer returns based on the repayment of debt owed by a pool of underlying assets. There's quite a range of assets that might constitute a given asset-backed security, from a pool of home equity or car loans to credit card receivables, or even movie revenues. Just about any stream of revenue could become securitized as an asset-backed security. Mortgage-backed securities are a type of ABS. These are bonds secured by home and other real estate loans. They're created when a number of these loans, usually with similar characteristics, are pulled together by an entity that then issues securities. These securities represent claims on the principal and interest payments made by borrowers on the loans in the pool. Most mortgage-backed securities are issued by Ginnie Mae, a U.S. government agency, or Fannie Mae and Freddie Mac, both U.S. GSEs. Often, these are traded as to be announced contracts to buy or sell a mortgage-backed security on a specific date. With such trades, the underlying mortgage is not known to the parties at the time the trades are made. Mortgage-backed securities exhibit a variety of structures. One of the more complex types is a collateralized mortgage obligation, which is an MBS composed of residential mortgages and that tend to be sensitive to interest rate changes and economic conditions. Investors who purchase a CMO receive payments, money from principal and interest, at a set schedule after the mortgage borrowers make monthly payments on their mortgages. U.S. Treasuries. U.S. Treasuries are issued by the federal government, and because they're backed by the full faith and credit of the U.S. government, are considered to be among the safest investments you can make. This means that, come what may, recession, inflation, war, the U.S. government is expected to repay its bondholders. They're also among the most liquid or actively traded investments in the world. Treasury securities include Treasury bills, non-interest bearing, zero coupon securities with maturities that range from only a few days to 52 weeks. Treasury notes, fixed principal securities issued with maturities of 2, 3, 5, 7, or 10 years. Treasury bonds, long-term, fixed principal securities issued with a 30-year maturity. Outstanding fixed principal bonds have terms from 10 to 30 years. And Treasury inflated protected securities, TIPS, fixed interest securities issued with maturities of 5, 10, and 30 years. TIPS shelter you from inflation risk because their principal is adjusted semi-annually for inflation based on changes in the consumer price index, urban consumer. At maturity, if the adjusted principal is greater than the face or par value, you'll receive the greater value. U.S. savings bonds? U.S. savings bonds are also issued by the federal government and backed by the full faith and credit guarantee. Unlike many other types of bonds, only the person in whose name a savings bond is registered can receive payment for it. The two most common types of savings bonds are Series I and Series EE bonds. Both are accrual securities, meaning the interest you earn accrues monthly at a variable rate and is compounded semi-annually. Interest income is paid out at redemption. Separate trading of registered interest and principal of securities, STRIPS. The STRIPS program lets investors hold and trade the individual interest and principal components of eligible Treasury notes and bonds as separate securities. STRIPS can only be bought and sold through a financial institution or brokerage firm, and they're held in what's known as the commercial book entry system. International and emerging market bonds. You can purchase bonds issued by foreign governments and companies as another way to diversify your portfolio. Since information is often less reliable and more difficult to obtain for these bonds, you risk making decisions on incomplete or inaccurate information. Like U.S. Treasuries, many international and emerging market bonds pay interest semi-annually, although European bonds traditionally pay interest annually. Unlike U.S. Treasuries, however, there can be increased risk for U.S. investors who buy international and emerging market bonds, and buying and selling these bonds generally involves higher costs and requires the help of your firm or investment professional. Bond funds. A bond fund is a mutual fund or exchange-traded fund that invests in bonds. These funds can contain all of one type of bond, municipal bonds for instance, or a combination of bond types. Each bond fund is managed to achieve a stated investment objective. Like most investments, bond funds charge fees and expenses that are paid by investors. These costs can vary widely from fund to fund and across share classes. If you have any questions about the different types of bonds, comment. Brad Williams, Frugal Finance. Thanks for watching. Hope that helps. See you soon.